Morning. Well, we've got another incredible week of news, and we've got so much to hit this morning. Of course, we got the Fed meeting yesterday, Joe. Some interesting comments right out of that. We have another possible bank failure coming.
Is this hot take Thursday?
It is. It's still rolling in this morning before we even went live. You've got China propping up their systems, their whole stock market right now. You've got their biggest developer in liquidation of foreign bonds.
Oh, foreign bonds. That's a great thing.
Yeah. U.S. pension funds.
Why we thought it was a great idea to invest in China.
And there's been really just a phenomenal amount of layoffs announced for this year coming up.
Yes.
So there's just a ton coming up. But
We're just squeaky clean. Like everything is golden.
Yeah. And, it's so good. You know what Powell had to say yesterday on how good it is?
How good is it? Powell, can you tell me how good it is right now?
Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that.
Confident.
Talking right to you, Joe. Joe, he's confident.
I wish I could walk into things and be like, hey guys, I'm just not confident.
Yeah.
I don't know if I'm going to have the confidence to do this. Right. And he's talking about the federal fund rate, right? Like dropping, what was this? What was the hot take? What did we see on everybody's social media that knew nothing about finances, but thought they knew everything about finances was there's going to be 6
rate cuts. 6 rate cuts. Everybody out there. 6 rate cuts this year. The Fed's going to pull everything back, even though, like we mentioned numerous times, Powell kept saying, higher, longer, higher.
They don't want to see everything get super hot. That's not going to be good, right? And exactly what we thought was going to happen. What we've been talking about on this very podcast for months now, from when everybody got hyped in November about 6 Fed cuts in 2024. Well, now we're seeing, tapered expectations. Now they're saying that March is a 50-50.
It's off the table.
Most people are saying May.
Yep.
I think we may not even hit May.
I'm dropping back to August. I was saying June. I think
June is possible. I'm leaning toward June.
Well, it's interesting. One of the reporters asked him yesterday about inflation numbers from December. And Powell's a plot guy. Follow the plots. He goes, that's too old. He literally said that to her. No, that's too old. You're looking at old data. It's a plot map. You're supposed to follow.
Isn't that
the whole point is you want to follow the trends and you want to see a trend of inflation going down.
But it's interesting, right? We're seeing, and a lot of what he's talking about, right? We don't have the confidence of like, are we able to, or is inflation in control? Well, we're starting to see all the other things, right? All the other movement. Where do you want to steer this? Because there's a lot that we're seeing that's saying we're getting ready to hit a little bit of.
Someone got a hold of the minutes of the meeting. Mm-hmm. And this was interesting because what they show are the changes of the minutes of the meeting before the meeting. And this was the big one. The U.S. banking system is sound and resilient. They took that out of his presentation yesterday.
I wonder why. Wait, what might have possibly happened? Whoa.
As my son Josh would say.
New York Community Bancorp, which is like, let's think about this, right? This is hot. This is the hot take for us, right? Margin of, we had Silicon Valley went under, and then what was the other one?
I'm blanking too.
Signature, I think it was, right?
Signature.
And who bought Signature's assets when it went down?
New York Community Bancorp?
Yes. Strikes again. And here it is. And the thing is New York Community Bancorp, like their stock, like their assets, most of their assets are tied toward CREs, commercial real estate.
They are the biggest holder of rent controlled housing mortgages in New York City.
In fact,
let me ask you if this name this rings a bell. Flagstar
Flagstar was bought out, merged with New York Community Bank, and they're still operating under a separate name, right? But Flagstar's a big lender, big bank. They're based in Michigan, right? They're a pretty big bank. They're very big in the mortgage game. And I thought it was interesting because like New York Community Bank, they had their Q4 earnings, they had their earnings announcements yesterday, right? And they were projecting 23 cents a share in earnings.
Yeah.
And what it dropped to? See? No, well, did you see what it was? It was negative 30 something. That's not just a little miss. That is like blew it away. But what was interesting was they wrote off $550 million in bad debts
on two loans. That was it. 2 loans. You know where they got the loans? Signature. The assets they bought.
Yep.
So this, I think, is the canary in the coal mine for commercial real estate, because we've been saying all along is those are the assets you're seeing in New York. My gosh, Blackstone walked away from their corporate headquarters, and the bank is trying to sell it. They owed $300 million on it. The bank's trying to sell it for $150 million. They can't sell it. And then Deutsche Bank this morning, right before we came on, just announced that they are doing, I believe, $500 million themselves, somewhere in that ballpark, for possible commercial real estate write-offs in the U.S.
500 possible, aka they've already allocated which ones.
They've allocated the money for the losses.
So this whole like strength of the banking, I understand. Like I'm really happy that he struck that out.
At least we know in one portion of stuff he's being honest.
Yeah, and here's the hard part, right? We look at Silicon, we look at Signature. Those were kind of like bank runs. Those were people pulling assets. Mm-hmm. I'm really interested to see what's going to happen here, because you see a stock and it shows here and it said like, oh, it was down as much as 46% Wednesday, then went to 38. That feels like a dead cat bounce because it's back down another 10% today.
Yep.
Right. 20
minutes ago.
Downgraded.
Like your company just became junk.
So that's hot take. That might be defamation. Was it? Wait, no. This is art. This is just our take on which it's very, very tough, right? Like, because we don't want to see stuff like that. This isn't good, but this is happening.
What if we said all along with the commercial that it's not going to be the residential that brings down the market this time? It's going to be the commercial. Yeah. How do you stop the commercial from dissolving? You've got to cut the rates, because everything is adjustable rate mortgages. Yeah. And they're all coming due.
They're 5-year. Commercial is not 30-year notes. These are 5-year notes.
Deutsche Bank said in what I read in Bloomberg article this morning is that their concern is the refinancing of the debt, because they can't refinance it. It's a little bit different, but still kind of based the same way, in that commercial real estate is going to be based on the income of the building. Mm-hmm. And if you don't have to have as much income if you're borrowing at 2% as you do at 5% to cover the debt ratio.
Yep.
Well, rents haven't gone up commercially nearly as much as the interest rates have. And plus you've got higher vacancies. So what's going to happen? They're not going to be able to refinance these things.
Yeah.
Or the banks are going to, if they refinance them, they're going to have to take a huge loss to refinance them. This is kind of a shot across the bow to wake up on the commercial side, that there's more problems coming with the commercial real estate than I think a lot of people see, and they just cut off the program that was designed to help the banks stay liquid through this program. Well, they've got 1 month. It shuts off March 1st. So,
what was it with the program? Which, unfortunately, these big corporations found loopholes that benefited them and weren't utilizing the programs as intended. So now they're going to lose benefit to those programs. And what's ultimately going to happen is it's going to trickle down, and it'll have an impact on who?
Us, the average guy.
We shall see. Very interesting. What else is going on in the news in the world of economics and finance and rates and all that fun stuff?
Interesting earlier this week because you got a little boost in the bond market because Yellen came out and said that we're only going to borrow $750 billion this quarter, as opposed to $805 billion. And we saw the treasuries actually profit from that.
Yeah.
Oh, well, there's going to be less available. So guess what? We're going to pay a higher price and push the yields down. There's still $750 billion available this quarter, which you can tell she's playing a political game. Don't generally like to get into politics here, but they've got $863 billion in the general treasury fund right now.
Yep.
You've got $863 billion in the general treasury fund right now. Why do you have to borrow $760 or $750 billion right now? Because when it comes to election season, you don't want to be doing all this borrowing.
Wait a minute. So we're borrowing more than we need right now just so that we can, make it look like we're propping up the economy better and stronger as we get closer to the election. That sounds too conspiracy theory for me.
Yeah, I know. But
you take off the tinfoil hat.
Yeah. I mean, when I've got, $100,000 sitting in my operating account, I always go and borrow an extra 150.
Well, that's how you make more money.
Just in case. Yeah. Well, I was going to arbitrage it. Yeah, I was going to try and borrow, at 2% and see if I get Yellen to give me, a 3% arbitrage.
Let's just invest in foreign entities. That'll help us.
No, we think we got it bad right now. Story from last year just won't go away. Evergrande has been ordered to liquidate.
Ordered to liquidate. Wow.
Liquidate.
Like Evergrande, how much in assets do they have?
Oh my gosh, I forgot. I want to say it's close to 300 billion. They have to liquidate.
Wow.
What are you going to do with an empty apartment in China?
What is it? The yen island. Can we just say it in what they have in assets in yen? It's yen, right? 2.3 trillion.
Yes.
That sounds way better than 300 billion in American dollars. But I mean, let's think about this. For size perspective, how much in assets Evergrande has though? 300 billion, right?
Mm-hmm.
That's more in assets than New York Community Savings Bank.
That's true. They broke 100 billion when they did the purchase.
Yep.
Which put them into a different category of bank, and there's different regulations that they're trying to adjust to. But you think about that. That's 300 billion. How do you liquidate $300 billion?
You too. I feel like there's got to be proxies set up. These things are going to get sold to, and somehow Evergrande is still going to have.
The worst part is this is for all their foreign investors. Which means U.S. pension funds
that invested heavily in which I don't understand. Super risky. Wouldn't trust. I don't know. I don't feel like I trust investing in. I wouldn't have done it. I'll say that. We'll leave it at that.
Yeah, I wouldn't have done it either. I'm sorry, just not going to do it. Those people, I mean, they're literally. I don't think they're going to get a dime.
Probably not.
I honestly don't think they're going to get a dime because I don't think the Chinese government's going to let them get a dime. And look what the Chinese government's having to do right now is they're having to prop up their stock market. They just put in, was it $279 billion, 2 trillion yen.
Do they just randomly print those dollars?
Yeah. Do you think we're going to poor China's going to get a little bit of inflation? They just printed 2 trillion yen. Or is it yuan? Sorry. Yuan. Yen is Japanese. But 2 trillion yuan into their stock market, and it's still going down. It propped up for 2 or 3 days, and then it started coming back down again. Well, to me, the world is just a total mess right now. It's breaking down behind the scenes, and you've got Powell on there. Just, we're confident. You're confident in what? Oh, and how does he feel about the housing market, Joe? How do you think?
I think he loves us.
Do you think he loves us?
Marshall Genzer with Marketplace. I want to ask a little bit more about housing. I'm wondering, how closely are you watching rent and housing prices as you evaluate whether and when to cut rates? And it seems like housing prices are not coming down as quickly as you expected.
So when we think about our statutory goals are maximum employment and price stability, and that's what we're targeting. We're not targeting housing price inflation, the cost of housing, or any of those things. Those are very important things for people's lives, but they're not, those are not the things we're targeting. We're also well aware that when we cut rates at the beginning of the pandemic, for example, the housing industry was helped more than any other industry. And when we raise rates, the housing industry can be hurt because it's a very interest-sensitive sector. On top of that, we have longer run problems with the availability of housing. We have a built-up set of cities, and people are moving further and further out. So there hasn't been enough housing built, and these are not things that we have any tools to address.
Wow, was that kind of a big?
You know what? There was confidence there.
Oh, he confidently said to you.
Yeah. He doesn't have any tools to address building houses. Like, he doesn't have a hammer.
Interest rates? Wait, no. Hey, you know what? You had your party. You had a good time. You gained all this equity. You made all this money. But you know what? Too bad. No more for you. No more soup for you. No more soup for you. No more profit for you. I mean, look at D.R. Horton last week in their announcement. They wrote off $65 million to buy down rates. They're going to have to write off another $65 billion or more to buy down rates. And so is every other builder. Because at the current prices, unless you do the buy down, it's very hard to afford these homes anymore.
Yeah.
And it just was like, you know what? There's nothing I can do. I'm so sick of the inventory thing. So sick of that. I get the lists every freaking day from the builders. The builders have inventory. There is inventory. The inventory for resales has gone up. So there's inventory. You know what there isn't? Buyers who can afford to buy the houses.
Yeah. That's
what there's not. It's not the inventory.
Well, and it's a tough piece right there, because how do you correct it? How do we get affordability in check? Rates would have to go down. Interest rates
got to go down.
Have to go down, or home rates have to go down. He doesn't want to drop interest rates, so he's kind of almost saying like, hey, we're not ready. Like, values need to drop maybe for him to feel it.
That was interesting the way she asked the question, because she asked, you haven't seen the prices go down like you thought they would. And he kind of looked like, but they're going to. That look in his face was just like, I thought it was a very interesting way in which she actually asked the question. And he just kind of, I don't have any tools.
That's a great way. I just love it. Like, I want to be able to say stuff like that about my job and people just accept it.
Yeah. With this on, I don't have the tools to do that one.
But I should still get paid. And it's just interesting because you get a sense where you would think, like, and I would think that the housing industry, rent's a big part of inflation. Like, that's kind of gone down. Like, they look at that when they determine its inflation numbers where they are. But then the way he kind of worded all of this was kind of like, we're not really looking at this. Like, it exists. We know it's a big deal, but it's not our focus.
Well, he said it's important to people. Yeah, it's important. They need a roof over their head.
Well, you know what? People can
give people those two things, they're happy.
We got anything else that we want to cover today? Because do we want to talk about like the Challenger layoff report that came out?
Oh,
like unemployment numbers continue to come.
Yeah. Well, you know what? He said that the employment numbers are still strong. But what happened this week? Well, my brother, who works for UPS, he's got, I think, a year left with UPS. He's been there. He'll be there 30 years.
Wow, that's pretty awesome.
Good for him. I mean, he's earned it. He's earned his pension, man. He busts his butt there. He really does. But they just got this nice, lucrative contract 6 months ago, right?
It was talk. Everybody was talking about it.
Yeah. Because now, the drivers can make $173,000 a year. And he's like, Brendan, he told me, he's like, Brendan, that's baloney. That's not how it works.
They're factoring in benefit packages and all that.
Packages.
Employer payroll taxes are wrapped into that 173
hours of overtime during the week, stuff like that. So what did they get? What did they announce? They announced 12,000 employee layoffs. 12,000. That's a huge amount of the workforce.
Yeah.
Then what do we got? We got the tech companies. Google's laying off out of their ad division. Was it 1,700 people? So I'm looking at this, and it only seems like they react slow to everything. Everyone tells you it takes a year to 18 months for everything to get in. So if you start cutting rates today, it's still going to be a year before we see it. But what's happening right now is we're just seeing all the signs of a recession coming up.
And I mentioned the Challenger job cut report warning, right? And that's based off of corporate layoffs that are reported to State Department of Labor. And it came up at 82,307 for January, which they said was like the biggest January since 2009. That's a statistic piece. Like they're only looking at Januaries from there. But what was kind of interesting was December's number was only 34,817. Like that speaks more volume to me, because when we were talking about kind of where the economy was growing and going in early January, they were citing how strong the employment sector was. Yeah, we almost 3x. We more than doubled, 2.5x the amount of large scale layoffs. These are large scale layoffs. These are like this is like required, and I forget the number. I think, what is it, like 50 or 100 employees being laid off at one time. And if you're a corporation that's a certain size, you have to report these things to the State Bureau of Labor. Like, I don't know all the specifics, but these are just what's being reported. This isn't the restaurant that's letting go of 1 or 2 employees, the small company that maybe only has 10 employees dropping down to 6. Like, those aren't being included in that number. This is just your UPSs, your
Googles, your Microsofts, your IBM. You're seeing the announcements, and I feel like they're kind of being pushed back a little bit. You know what I mean? Not really emphasized in the numbers out there. It has been a very, very interesting couple of weeks as far as the news for us overall. Yeah, which I enjoy, but looking into the housing industry is, how do we take this and help our people? That's the question I have, because I'm sure you get it, I get it, which is, what do you think the economy is going to do? What do you think rates are going to do? What do you think? I think right now, I think we've hit a balance where this is what we're going to see. Yeah. For the next at least 3 or 4 months. We're kind of in that rate bubble.
What I joke with people too is like, and I say joke, that's probably the wrong word. But when you're buying real estate, that's a long-term investment, right? And when people start thinking just about like stocks and like if we were to compare with stocks and bonds, like, are interest rates going to go down in the next 3-4? Well, that's kind of like, that's like playing a stock market type scenario. Like, what's going to happen in the immediate, right? These are long-term investments. When you're buying real estate, you're buying an asset that appreciates over time, right? Are there a little bit of downs and ups? Absolutely. But right now we have a situation where if you feel confident in your job and you feel secure in your employment and your income structure, rates are much better than they were a year ago, right? It's much better than they were 6 months ago. And now we have inventory, right?
Yep. I was at a Madame development in DeLand, and they're built out, but they've got 9 inventory homes sitting right now. And talking to the agent on duty, she's like, well, we've got 20,000, but if you ask for 30, you're going to get it. I'm like, okay. But you think about that. that's what you got to know, and that's what you have to use. So, okay, I'm going to ask for 30 because you know what? I'm going to have them pay all my closing costs, but I'm also going to take 10,000 of that, and I'm going to buy down my rate at least a point. I'm not going to do one of these 3-2-1s. Do a permanent buy down, and don't be. I mean, D.R. Horton. My gosh, I can't tell you how many houses I've seen with their inventory right now. They got to be 60, 70, 80 homes easily. And you got to remember, they've got probably 30, 35 different developments, if not more, in the Central Florida area. They're one of the biggest. Yep. And same thing, getting their sheets every single day. This morning, again, Taylor Morrison, price cuts, price cuts, price cuts. So this year, don't only look at the resales, look at the new builds. You know, because there can be some fantastic opportunities out there. Yep. And let's get into the numbers for the week, and you're going to see. We got to fly through these because we've been talking we're already 30 minutes on this. But anyways, real quick, we only had 259 homes sold this past week. Low. So you can see the numbers are down. You know, people are saying, "Oh, things are heating up." This is kind of carried through from December, so those numbers are way down. This is the big one, though. Condos, only 77 homes. That's it. Dropping. 77, and then we get into what we look at every week: original to list. You're seeing here average $32,000 off the original list price. And we are still down 93.7% off the original. And our days on market haven't shrunk at all. We're still sitting at 60 days. This is turning into a buyer's market. It really, really is. And then you look at it graphically, and you're just consistently from September, we're 450, and we've dropped an average of 200 homes per week. That's 800 to 1,000 homes less we're selling per month. Yeah, that's significant. That's huge. Then you look at our inventory. We did take that dip. We're starting to level off, but I'm expecting this over the next couple of weeks. Because we're hitting February. Usually March is when it really starts heating up for us. Yep. For summer season, right? Summer season. I wouldn't doubt if we see this get up to close to 6,000 homes very easily. Yep. Because I look every morning, and it's always more new listings than it is sold, than it is pending homes. Yep. Look at it every morning. And then you got our condos. There it is. Look at this. Wasn't great. It was like 135, 140, 77. Yeah. Can we get it to 50? Yeah, these condo owners are really going to have to start. They're going to have to start dropping their prices. That's it, plain and simple, because you have to compensate for the incredible increases that they've had on the homeowners association dues. Yep. So, that's looking at it really quick. It's flat, so we've got to come up. We're really working hard to find new ways to help buyers, and we've got a product that Joe found. And we're going to be making an announcement on that probably early next week. I'm sorry, that song keeps going in my head when I talk about it. So keep tuned to the channel, please, because it's a fantastic program. The biggest little hint we'll give you is there's a $5,000 grant that doesn't have to be repaid with the program. That's good stuff. So stay tuned for that. Join us again next week. Thank you for joining us. Like and subscribe. See you next week. Boom, boom. Like, subscribe. Hit the pound button. Comment. Be on.